And welcome to the Aaron Katsman Show. I'm your host, Aaron Katsman. We speak to your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the podcast and to the YouTube channel. And if you find this is interesting, you can always go ahead and hit the share button below. So I'm going to continue a theme that I've been speaking about recently, and that's the people out there pushing that you don't need necessarily to have an advisor. You can do it all yourself. It's really, really easy. Recently, I spoke with a retired gentleman who was a widow. He was in his mid 70s. He had a nice sized portfolio. And when we started looking at the portfolio, he was very, very, very conservative. Okay. He had enough money, right? And he was generating it. He had a portfolio mostly of just bonds and CDs. And he told me something really interesting. He said, he was speaking, he was watching something online, and then his kids have been involved. And they said they were speaking to him, and they said, um, we think, you spoke to us a little bit about investing, and we know you have a very, very conservative portfolio, but we heard from people that you should really put all of your money into the stock market and just put it into like an index fund like the S&P 500, and you'll do great. And he said, what are you talking about? Oh, okay. He goes, yeah, that might be true, but you don't know anything about me. You don't know anything about my situation. You don't know how I really handle money. And it was really, really illuminating to me because this is something I speak about all the time, right? It's really easy for somebody who doesn't really have to follow up with people over the long term to come out and give advice. Yeah, just put all your money in the S&P 500. You'll be great because statistically the market does 11% a year and blah, 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 blah. That's all great, okay? But it's not your money. And you don't have to go to sleep at night wondering, oh my God, am I going to, because the market is going, because Trump is putting tariffs on the world, right? Oh my God, the market is dropping and there are all kinds of headlines. The market's going to crash. And the Independence Day of July, of April the 2nd, where the tariffs are going to hit. Oh my God, all hell's going to break loose. It's not priced into the market, and the market's going to crash just like it did in 2008. And the market's going to drop, 50%. And if it's not your money, but you actually have to live with the consequences, and you're in your mid 70s, you're not going to go back to work, right? And you have a very comfortable lifestyle. Maybe you don't need to be linked to the stock market. I say to those who are out there preaching nonstop about, oh, the S&P 500, put your money in the S&P 500, put your money in the S&P 500. It's funny because I had another call recently it was in America, and it was like a whole family had inherited some money, and it was like multi-generational, and there were even some uncles involved because they also got, and anybody who knows me, I really don't like doing sort of broad-based calls or presentations like that because I think it's really, really important to do one-on-ones with people to really get their own individual approach to money, not just their goals and their needs and the fact they don't want to open up and tell everybody else, what their financial situation is. Sometimes it's embarrassing, sometimes it's not. But when you go one-on-one with somebody, you really sort of have an ability to understand their approach to money. Just like the person I spoke to about earlier, right? That sometimes they're nervous and they're scared and they don't want to have so much exposure and they're happy with their life. And you know what? If they make another $100,000 before they die, they couldn't care less. It doesn't mean anything to them. And that's what I think a lot of these people miss. There's more to life than just making money and linking yourself to the S&P 500. And you could have made da 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 da. Okay, I've sat with people who literally hyperventilated when the markets dropped. I remember 2000, right? I remember the high-tech bust in 2000, the bubble burst. And I remember people calling me up, one in particular, who was literally hyperventilating every day as he lost more and more and more money. And I say to those who preach, do it yourself and put your money all into the S&P 500, is that really the good approach? Or maybe you should have a little bit of asset allocation. Maybe you should not be 100% in the market. Okay? Because your health is worth a lot more than $100,000, than $200,000 at the end of the day. And they forget, they just don't understand this because they haven't been around long enough. They haven't been through market massacres, and they haven't been with clients long enough. And that's one of the reasons I'm not out here, right? There's a place for everything. There's certainly a place for people to do it themselves. I'm not against it, right? But there is also a place for advisors, right? There's other things they do. Oh, it's a ripoff. You're paying your advisor. You just put your money in the S&P 500. Yeah, okay. Unfortunately, it's the advisors who clean up the mess from from the people who are preaching that once the market drops and the people are like scared, right? Anyway, I digress. The point is, when you're setting up a portfolio for somebody, it's not just what the textbook says statistically you should allocate funds, how you should allocate funds. It's understanding the person's approach to money. And if they're nervous about money and they're retired, to force them, or to, I say force is probably a bad word, but to continually try to persuade them to put their money in the market because statistically that's the best way, and you don't want to leave any money on the table because, as we know, once you pass away, you're buried with all your money. Not. It behooves people to understand people's approach to money and then allocate the funds. I'm not talking about the whole financial situation, how much you spend and your income and your, all. I'm not even talking about that. I'm talking about something more basic. Someone's approach, they can't sleep well at night. Why on earth would you say, well, statistically, they should be in the S&P 500? That's just dumb, and you're not serving your client particularly well. There's a reason that there are things out there like bonds and CDs, right? If it was obvious everybody should just put their money in the S&P 500, they would do that. But there are people who are not always cut out for that, or not cut out to have all their money in that, or they have a certain amount of money and they need fixed incomes to live. Okay? Got that off my chest. You've been tuning into the Aaron Katsman Show. We speak about your life, money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we will speak to you soon.